Welcome to the Sarah Finkelstein Show, where the next 10 minutes can change your life. Also on Spotify, SoundCloud, and iHeartRadio. Here's Sarah.
Have you ever wondered, will it be enough for you and your family? What am I talking about? Well, let's start with the most basic foundation in your financial plan is insurance. And let's begin with life insurance. You probably know that life insurance provides financial security. That's right, financial security. In the event of a premature death, it provides the money to pay for funeral costs and other expenses. Life insurance also provides the funds to pay off debts, such as credit card debts, a mortgage, all kinds of outstanding debts that one may have and one's family members may have. And also, very importantly, is education. In the event of a premature death, the life insurance proceeds can be used to pay for college tuition for the children as they get to that age of needing to pay for college costs. So the life insurance proceeds, of course, can be used to cover tuition. And not just for your own children, but you know what? Some grandparents also have life insurance to cover tuition for their grandchildren. Oftentimes, grandparents are very actively involved in helping to make sure that their grandchildren can go to college. And if you have that special kind of life insurance, which builds cash value, you can use your life insurance while you are alive to supplement your retirement income. That's right. You can use your cash value life insurance while you're alive to supplement your income needs in retirement. And it could also help you supplement income needs for your household, not just for yourself. And let's not forget the importance of life insurance in estate planning. Let's say that you or your loved one will have estate taxes to pay. Oftentimes, this is one major reason why business owners will purchase life insurance, is to make sure that they have the funds to pay those estate taxes, those death taxes. So life insurance is, as I said, the foundation of your financial plan. And it also provides peace of mind that your cash value life insurance could be used to pay for long-term care if you have not done long-term care planning. So there's a lot of benefits to your cash value life insurance, but will it be enough? The policy that you have, is it going to cover everything? Is it enough to keep up with rising costs? Is it enough to keep up with inflation? Is it enough to keep up with the rising costs of college tuition? Wouldn't you be better off if you had enough life insurance? You know, most people underball the amount that they need and they overestimate the premiums that it will be charged to them. So before you make any guesstimations, I strongly suggest that you sit down with a well-versed life insurance agent, because there's all different types of life insurance, and it is important for you to understand what you have. What I see quite a bit is people purchasing a life insurance policy, and what happens then? They stick it in a drawer and forget about it. But really, you should look at your policy periodically so that you are aware of what you have. Income in retirement. Will it be enough? For most people, the Social Security will not be enough. Even if you are one of those people that has been a high wage earner and therefore you will get a bigger Social Security retirement check than other people, but it probably still will not cut it because you've been used to a certain lifestyle. Remember, the three-legged retirement stool consisted of your Social Security, your pension, and your personal savings. Well, guess what? A lot of people don't have pensions anymore. They have 401k plans. And your 401k plan is not designed to provide you with guaranteed income for the rest of your life. So the sooner you start planning, the better off you will be. You want to make sure that your income in retirement will be enough. And right now, as you look at your financial plan and what you expect in your retirement years, is it enough? If not, you may need to do some tweaking and some improvements to your current plan. And yes, you may have to give up something now to get something else down the road. But do you want to live your retirement years in carefree enjoyment and peace of mind? Or do you want to have to worry about bills in your golden years? You know, it's interesting. I find that most people find the money to purchase or do what they want to do. And they don't necessarily find the money to do or purchase what they need. We are a society of instant gratification, and we want what we want now. We don't want to wait. We don't want to hold off on our desires. Again, people find the money to do what they want to do, as opposed to what they really truly need for themselves and their family. And it's all about choices. We all make our choices. And if you have long-term vision, you'll probably, maybe, possibly, probably make slightly better choices for you and your family. So because a lot of people don't have pensions anymore, or even those that do have pensions, those pensions may be underfunded. Well, did you know that you can have your own pension? You can create a pension. Yes, we do that every day in our practice. We help people get the money that they need in retirement. So make sure that you will have enough. How much will you need? Well, if you account for inflation, you'll be able to guesstimate how much you will need in your retirement years. So let's say you're going to be retiring at 65. Well, guess what? You could live in your retirement into your 90s or even beyond 100. It's happening more and more to people these days. They are living very, very long lives. And the longer they live, the more money they need. If we only look at the inflation challenge by itself. Also, if you're one of those proactive people and you've done some long-term care planning for yourself and your family, let me ask you, will that long-term care policy, will it be enough? Will it keep up with the rising costs of healthcare Will it keep up with the rising costs of assisted living, community rents, and levels of care? Some of these places charge $6,000 a month or more, and that's just for the base rent. Add on top of that the levels of care, you could be looking at an extra maybe $2,000, depending upon one's needs. So that's a big number. It's not getting any cheaper, and it's only getting more and more costly. So make sure that you are prepared and your loved ones are prepared to deal with long-term care, because 70% of people over the age of 65 will need long-term care. Now, some of them might need it for a very short period of time, and others might need it for years on end. So make sure that you're prepared. Now, what happens if you're not prepared and you don't have a long-term care plan? What I've seen in those cases is that people will deplete their retirement monies, their 401ks, their 403bs, their IRAs. They'll spend it to pay for the long-term care. Is that your intention? Is it your intention to spend everything that you've saved for and worked for your golden years, to spend it on healthcare? So there are choices and options available, and decision is yours. You could live with the consequences, or you could plan. And choices have consequences. Decisions have consequences. So there you go. These are important factors to summarize. Make sure that you will have enough income in retirement. Make sure that your life insurance is sufficient for your needs and your family's needs. And make sure that your long-term care plan is up to snuff. I would like to thank Tony of TRC Voiceovers for the fine work on the Sarah Finkelstein Show.
Knowledge is power, but only when you implement what you've learned to your own benefit. Tune in next time for even more powerful tips on the Sarah Finkelstein Show.